Welcome back to the YouTube channel. Today I'm going to give you guys some tips and advice if you're going to buy your first home. I'm reading articles that said home prices are on the rise again, and so if it's your dream to own a house, this is what I would recommend my family members and my friends to do if they're on the first time home purchase. So first of all, I would tell them, are you 100% sure that you're going to live at that house for 3 years or more? If the answer is no, and they don't want to turn it into a rental unit or something else like that, I would advise them don't buy, rent, because renting is huge flexibility. Okay, so but you do want to buy a house. So what do you do before you buy a house? Well, before you even speak to a realtor, this is what me and Allison did. You got to make sure that your ducks are in order, that you have some money to put down, good credit, are up on your bills, and your credit card isn't past due, and you have more income than going out. What does that mean? Well, that means that you are living within your means. I know for me and for a bunch of other Americans, that's it's quite difficult because we love to spend money. So what's important is that you should always make sure that your bank account and your credit cards are paid for every month, at least the minimum payment. So with that said, when you do that, you have great credit worthiness when you pay on time. That means that a bank is going to want to give you a loan because it's in their best interest to get you to buy a house, so they'll make money on the interest. So they absolutely want you to buy a house. You just need to show them that you can manage money. What does money management mean? Well, money management means that if you're making $5,000 a month and you have a car loan for $4,500 and you somehow coast and buy on credit cards, and you're like, I'm 35 years old right now and I'm gonna go buy myself a house. It's probably not gonna be possible if you have two car loans that are both sitting at $1,500-$1,600 and you're renting, and now you want to obviously buy, and you're gonna say, oh, I'm renting right now and my rent's gonna be more, my rent's more than a mortgage would be. Well, then you should buy, but you need the type of credit for a home buyer and not just the type of college credit where you can just go get a car loan. So what do? You fix your credit, you pay you pay bills that were past due, and you get your credit in order. And I know that's the hardest part because everything else is going to be pretty damn simple. So get that fixed, and that might take you a year or two depending on what you got going on, or a little longer. So but now you have that goal in mind because you also want to save up for a down payment. So now you're going to start looking, and you should always get pre-qualified before you contact an agent, so you can give that agent your letter of, what do you call it, your qualification. Yeah. So how we did it was, first time we went to like Rocket Lender or Rocket Mortgage, or just a huge company in Michigan, I forgot their name. And basically you just type in all the information and you're gonna go with the loans, Quicken Loans. Yeah. And so what you do is you basically get qualified with them first, and then you can go to a realtor and say, hey, I'm looking for a house. Yeah, I'm pre-qualified with Quicken Loans, but I would take your lender. I would also get pre-qualified with your lender, because then the agent that's actually putting in the work is knowing and is capable to know what you're going to close at. So when you get that letter of pre-approval, you show it to your realtor, and then your realtor asks you, hey, can you get it with my guy? Most of the times they'll work with other lenders and stuff like that, but it's great for a first-time home buyer, if you go with your realtor's lender, because then they make sure that they're going to clear you for whatever house it is. And when you get that pre-approval from Quicken Loans and it says you're pre-approved for $500,000, you should not look at $500,000. You should look at $400,000 to $450,000, so you have some negotiation room, if you're in competition and you need to go over, or if something else. But I'm telling you, if you're going to look at houses for 520 and you only qualified for 500, you need to come up with that 20, or you got to somehow figure out how to increase that and make it happen. So it's very, very standard and simple process. Once you kind of get the hang about it, and you just talk to your realtor, and then you go look at houses. So when you're going to go look at the houses with your realtor, that's where like the fun part begins. You go and you check and you make sure that the house is aligned right, exactly how you want it, and then you just gotta find the right one. And then then you go into negotiations. So what happens is, once you decided which houses that you want, you're gonna put in an offer, and you're gonna have due diligence period. And in that period, you're gonna get somebody out there. Maybe your realtor has somebody that they work closely with, but you're gonna get a home inspection. I've never bought a home, even during crazy markets, without a home inspection. No, I actually did buy my duplex in North Las Vegas without a home inspection, but that was because I have the handyman skills to fix stuff when it breaks. So that was one part. That was like the only, but that was the company too. So with my company, I was like, yeah, if I have to rehab something, I can write it off. For my personal house, I can't. So all my personal houses had inspections on them, and actually we know what the problems were before going into it. Because if you waive that inspection and the air conditioner goes out and you do not know about it, you're gonna pay out of pocket. And if you find it, you can ask, not in a competitive market too much, but in a market like now, you can tell them, I'm gonna take your offer, and I'm either gonna take $15,000 off, or what I'd rather prefer is you actually fixing their conditioning. And then they have a decision: do they want to go forward with you, or do they not? Because if they're saying, no, we don't want to deal with that, the next person might not want to deal with that problem either. In a competitive market, yeah, you're going to be kind of out of luck, because there's probably going to be multiple offers. So your thing really doesn't count, because at the end of the day, it's all money. So if somebody comes in with a few $1,000s more or less, that's easier to close. You'd rather take that than take that other person's, or take that other guy's offer. So, but let's say you negotiated $15,000 off your house price, and you're now in the stage where nothing happens. You're waiting till the loan funds, everything cleared. You did your due diligence, now you're waiting till the loan funds. Then after the loan funds a little bit, you're gonna wait and see that nothing happened. Because I think there's gonna be one more bank statement that you need to provide. Did we have to provide another bank statement right before we closed, or no?
Yes.
Yeah, we had to provide another bank statement right before we closed. And take it from me, don't buy a car or finance one while you're in escrow, because they're gonna freak out and say, oh, you did something, you did this. So don't do that. Stick to yourself and wait. You have a huge purchase coming. It's gonna be nice, because 2 months you're probably not gonna have a mortgage, and then it's gonna tag, and then it's gonna start happening that you're a homeowner. So if you purchased the house, congratulations. So if you're gonna think about buying one, so that's gonna be after. So you're thinking about buying one, and you're buying in a market that is not that competitive, you're buying in an area that is not that desirable, and you just wanna be a homeowner, great. So you just bought your first house, and now 2 years go by, or 3 years, and your company offers you a better and bigger position paycheck somewhere else in another state, across country. So now, like, what do? Do I need to sell? Well, in a market where nothing sells, you need to sell either really cheaply, or it's going to stay on the market for a very, very long time. So what are you going to do? So are you going to rent a new place at your at where you're moving, or are you gonna buy again? Because you probably can't buy unless you sell that place because you want to upgrade. You knew that the house that you're, oh, I like a little bit of bigger oven. I'd like to be the kitchen be a little bit bigger and the bathroom smaller. So you're looking for that. But it's hard or almost impossible if you still have that other house, at least for most Americans. So what do? You put it on the market, but the market isn't doing right. So you got to think about that a little bit before you buy the house. If I can't sell my house, but I need to move, what am I going to do? Can I convert it into a long-term rental? Yeah, you probably can. But now, since your down payment wasn't that big and your mortgage still kind of big on it, and rent in the area aren't going to be enough to provide you to cover the mortgage, you're basically paying out of pocket for somebody else to live in your house. So you need to be aware of how long you're going to keep it. If you're saying, I'm going to keep it for 20 years, fine, do it. But if you're like, I'm going to keep it for 3 years, then I'm going to sell, then it might be really, really difficult to get rid of the sucker without taking a loss. And yeah, historically it always went up, but if you bought in 2021 and now house prices came down 9% or 10%, and you need to sell again, haven't even tackled the mortgage yet, only interest, you're not in good shape. You lost some money there and then transaction fees, so you're going to be in trouble. So if you're my friend, I would tell you to be very cautious when you buy. It needs to be a super long-term commitment, and homeownership can be the biggest blessing or the worst blessing depending on how you look at it. So this was it for this video, and I will see you in the next one.